So Barclays are now leading the way with a 2-year fixed rate deal at 3.79%. But before we celebrate too much, inflation's peaked at an 18-month high, and that could throw a spanner in the works for future interest rate cuts. In this week's update, Barclays, Santander, Halifax, and others cut rates again. But are the reductions slowing? Nationwide, Accord and Coventry all improve affordability rule. The government confirms its 95% mortgage guarantee scheme is becoming permanent, but is it even necessary? There were shocking revelations from a BBC Panorama expose showing some estate agents pushing illegal sales practices. Inflation has jumped and the job market continues to weaken, and house prices are rising again, but rents may be finally easing. So this week has been an extremely busy one for news, so let's just get straight into it. First up, we're going to take a look at the lender rate reductions. So Barclays have gone hard, and they're now offering a market-leading 2-year fixed rate at 60% loan-to-value at 3.79%. Santander, Halifax, Coventry, and the Mortgage Works, amongst others, have all trimmed their rates again, and the Mortgage Works have slashed their product switch rates for their existing clients. Accord have taken a knife to their buy-to-let range for new business, which is giving landlords a little bit more breathing room. Now, all of this is great news for borrowers, but the rate cuts do seem to be slowing down a little. So could it be that lenders are finally running out of steam with their rate cuts? While we're talking about rates, let me know in the comments, have you seen any particularly good standout rates that you'd like to report, or are you feeling that rates are pretty similar across the board with a variety of lenders? Now, moving on to lender criteria tweaks, and this week there's been quite a few. So in a video a couple of weeks ago, we made mention of the fact that the regulator had indicated that lenders could start to ease their affordability criteria a little in order to be able to lend more to certain individuals. Well, I'm pleased to say that a few lenders haven't waited long. If you haven't heard of it, Nationwide Building Society offer a scheme called the Helping Hand Scheme, and this just became more accessible. It's aimed at first-time buyers, and they've just dropped their minimum income threshold to £30,000 for sole applicants and £50,000 for joint applicants. And that means that you can now potentially borrow up to 6 times your income at 95% loan to value, even on new build properties. Accord have followed suit. They've also reduced income thresholds to 50,000 to access both their 5 times and 5.5 times boost range, which also is exclusive to first-time buyers. And Coventry have tweaked their affordability criteria as well, meaning that there's potential for customers to be able to borrow up to an extra £35,000. Now, this is all great news, but here's the key thing. Just because you can borrow more, it doesn't mean that you should borrow more. Stretching yourself to the limit might get you the keys to the home that you want, but will it then leave you financially trapped inside that new home and unable to have a social life? So it's important when considering how much you want to borrow, do speak to a broker and try not to max yourself out. Tell me please in the comments, if you were looking to purchase a property, would you max yourself out in order to get the home that you want? Or would you prefer a little bit of breathing room so that you can still enjoy life? Let me know in the comments. Moving on, let's take a look at what's happening beyond the lenders and the wider economic context. So inflation jumped to 3.6%, the highest it's been for 18 months. And no, it wasn't supposed to happen. What I find really amusing here is that all of the media outlets are saying that this was unexpected. But come on, was it really unexpected? When you look at the data and you look at government policy with things like raising employers' national insurance contributions and increasing the minimum wage, what exactly do you think happens? These increases cause an increase in inflation. So why on earth are you reporting that it was unexpected when actually it was fully expected? And what actually makes this rise in inflation worse is it's not driven by consumer spending. It is all government policy driven inflation. And that is a beast that is far harder to tame. We also saw worrying employment stats in data released by the ONS. Payrolled employees dropped by 178,000 in the last year. Unemployment is now at 4.7% and it's rising. And job vacancies fell again, and they're falling in 14 out of the 18 industry sectors. This is a stark reminder that many people across the UK are still struggling. But it seems that those in government are happy wearing their rose-tinted spectacles. What's your take on this? I'd love to know. Do you feel like the economy is improving, or are you still feeling the squeeze? Let me know in the comments. Moving on again, official ONS house price data was released this week, and the average property price now stands at £269,000, which is up 3.9% year on year. However, rent rises are actually now easing. They're now going up at a rate of 6.7%, which is down from the 7% that was reported in May. And this all aligns with what we're seeing too. Activity really is picking up now that the stamp duty panic has passed. And we're also noticing a big increase in first-time buyer inquiries as well. In relation to the rent rises easing, I think that this is because landlords are now actually getting used to this higher rate environment that we're sitting in. Most of the remortgages from the lower rates onto the higher rates have happened, and there's only a few that are still sat there on those low rates that need to remortgage onto the slightly higher rate that are now available. So I think that's probably one of the reasons why we're starting to see those rent increases slowing slightly. Now, I'd like to ask, if you're renting or buying right now, how are you finding the prices? Are property and rent prices comfortable? Or do you feel like you're getting priced out of things? Please let me know your thoughts. Now, here's an interesting story. If you watched BBC's Panorama at the beginning of the week, you'll have seen the undercover expose on conditional selling that happens with some estate agency firms, including Connells and Purple Bricks. Program highlighted how buyers are being pushed into using in-house mortgage brokers or solicitors in exchange for preferential treatment on offers that they make on properties. Now, let me be clear, this practice is illegal and it breaches the estate agent's code of practice. It is, without doubt, completely unacceptable and it needs to stop. I have done videos on this on social media, so if you haven't seen them, please do go take a look. But no doubt you'll have seen this week all over social media lots of mortgage brokers talking about conditional selling. Now, it's important to say not all estate agents are like this. Far from it. There are many good ones out there. But these shady, underhanded tactics damage trust and hurt consumers. And that just cannot be allowed to happen. So, if you're a victim of it, report it. Tell me, have you experienced conditional selling in the past when looking at properties? And did it put you off? Or were you feeling that pressurized that you just went ahead and used their in-house broker? Please do share your experiences below, the good, the bad, and the ugly, because I'd love to hear it. And if you didn't see the program, I think it's still available if you go look on BBC iPlayer, and it was called Undercover Estate Agent. Go take a look and let me know what you think. Now, lastly, this week, the government has confirmed that its 95% mortgage guarantee scheme will now become permanent. Now, whilst that might sound great, my question is it actually needed? Because we've got lenders that already lend at 95%, and some, as you probably know, at 100%. So I want to know, is this new guarantee scheme from the government just a publicity stunt? Another opportunity for them to claim the credit when the property market starts to improve? Or is it something that we really need? I'd love to know your thoughts. And also, do you think that these government schemes and tinkering with affordability risks fueling another housing bubble? Anyway, so what's the takeaway from this week's news? Well, rates are still falling, just more slowly than they were. Affordability is improving. But as I said, don't let that tempt you to over-borrow. The market is showing resilience despite economic headwinds that we're facing. And that inflation and employment data, well, they're both red flags. And it could really have an impact on the next Bank of England base rate decision, which incidentally is on the 7th of August. Now, the expectation is that there will potentially be a cut of 0.25%. And some people are reporting that that now actually might be the last cut that we see this year. That said, HSBC economists today said that they thought the base rate would be 3% by the middle of next year. So, apparently, there's still hope. But tell me, do you think that the Bank of England will make a cut in the base rate at the next meeting? Or do you think that the decision will be something completely different? Also, tell me, what do you think is going to happen to base rate for the rest of the year and moving into 2026? Now, please do drop me a comment with your thoughts. Consider things like this. Have you spotted a great deal out there this week that you'd like to tell everybody about? Are you feeling the pinch on affordability or rent? Have you been pressurized recently by an estate agent to use their broker or solicitor? And what are your thoughts on the new government mortgage guarantee scheme? I read and reply to every single comment, and so I'd love to hear your views, along with ideas or subjects that you'd like me to cover in future updates. If you don't already, please do consider subscribing to the channel, because that way you'll be notified when the next week's update comes out. And remember, there's a lot changing every single week in the mortgage market, and I'm here to sift through it and break it all down for you. Thanks for watching, and I'll see you next time. Take care.